I'm the Husni FX mentor. This video I'm gonna explaining uh, an indicator which is called the TDI Traders Dynamic Index. Uh, as you know, we need the benefits of using TDI and what are the benefits we are getting if we use TDI indicator in the market. This is most of the questions some of my friends in the group, in Telegram, and also Facebook. They ask me, why do you always use TDI and what is the benefits you are getting all the most? So the benefits that TDI gives me is that I always get easily the or maybe how to get entry and also exit conditions, or plots of entry and exit conditions. So this is one of the benefits that TDI helps me. And the next one is, that most of us we use different strategies, but one thing that we cannot forget in trading is how to rank a trend, because we need to identify the weak and the strength of a trend. And TDI exactly gives me a confirmation of strength of a trend or weakness of a trend. The third, or maybe the other benefits that TDI gives me is whenever I wanted to realize how positive and negative market momentum reveals. So exactly it helps me reveals of positive and negative of market sentiment. This is exactly what we need when we are trading in financial markets in order to identify in a price action. So also when I'm using TDI, one of the most important thing in that gives me TDI is identifying market reversals with regular divergence signals, and also identifying continuation patterns with hidden divergences. So I found those divergences when it comes in hidden or maybe regular divergence. I found it easily using TDI. And the last benefit that I get when using TDI is triggers of multiple crossover alerts for more trade opportunities, because this indicator is exactly shows me what I cannot see most of the time, because when I use different indicators or maybe different tools in the on the chart, some things may be getting hidden in. So that is exactly what the TDI shows me or gives me. So we need how is the structure of TDI, because we need to understand exactly how it works. Let me give you the method as a theory first and then show you how it works in practically. So number one, uh, when using the TDI, so we need exactly trading decisions, and in every tool there is a general rules to follow. For example, when you want to make a decision, you need to have something that is giving you a confirmation exactly when price rises. The TDI shows an upward movement with a certain levels. So it means that you will take a trade which is long. So trade long. So the next one is, as the structure of the TDI, price rises up, but the TDI is a flat. So it means that price is rising, but the TDI is not rising, it's a flat. So turns downs and or means it goes up in a certain levels. So you have to prepare to a trade as a short. Exactly this will I will show you on the chart. So price falls, so the price is falling down, and the TDI shows downtrend movement within a certain levels, so you should trade also short. So price falls but the TDI is flat. So this is what we call the thumbs up or below a certain levels. So you should prepare to yourself to take a trade long. Exactly, there are many things that I cannot explain on the mod, but let me show you how to use right now, because this is exactly really good at to show whatever the things you see. So this is the TDI. We have the green line, this green line, as you can see, the green line. You can see that green line. So what should we call the green line? We shall call the RBL. So RBL means RSI price line. So we should call the RBL, okay? Okay, RBL, because we have to understand RBL. So that is the green line, which is the RSI price line. So the other one is the red line, which is the trade signal line. We should call that one TSL. Okay, we should call that TSL. Okay, so trade signal line. So whenever you see that things, I will show you how to use these lines, because they are very important. So the other one is the yellow, this yellow. So it seems a gold, but when I go and exactly go there, it must be yellow. Okay, so you see the yellow. Okay, so the yellow one, we call also that yellow one, we call that yellow one market baseline. Okay, market baseline. So it's MBL. So when you see these things, you have to understand what it means. So we also have exactly blue lines, which you see as a Bollinger Band. So this is upper and lower volatility bands. So you should call this, you should give the exactly the name: upper and lower volatility bands. Okay, upper and lower volatility bands. Exactly what we are missing is we have three levels here. So I would like to explain also each level as what each level is all about. Okay, we have here level 68. So 68 level. So what are we using the 68 level? So we use that level whenever it's upper level line. So we call this upper level line so overbought condition. Okay, overbought condition. So that is overbought condition. I think you have understood. Okay, so the next level which I want to explain is, okay, which I want to explain is level 50. Okay, level 50, which is also the middle level line. So what does this level mean, or what it does? So let us know it. So the medium point between positive and also negative sentiment. So whenever we wanted to know the level, or whenever the price is on that level, so we have to know that it's medium level line, which means the median point of point which is between positive and negative sentiment. So we see that things, okay. Okay, positive and negative sentiment. So the last level is level 32, which is also the opposite of level 68. So level 32, so on this level, this is the lower level line, which is also selling exhaustion. So we are considering this level as oversold condition, as oversold condition. So exactly you have understood the structure of the TDI. Exactly, you know what the TDI exactly creates for you. So you know that we have the RBL, which is the green line, means the RSI bright line, and also you know the TSL, which is also the trade signal line, the red line, and also the MBL, which is the market baseline. You know the upper and lower volatility bands, the blue lines, and also level 68, which is this level, this line you see on here. So exactly you know all the structure of the TDI. Let us now explain how simple you can understand how these things work. Exactly, I will show you. So when do we buy and when do we sell? Exactly, you have to understand what I am gonna explaining. Whenever, okay, so I will show you something very simple. Do not confuse it. Whenever RBL, the green line, is greater than level 50, this means this equals to the price is in positive sentiment, and you know that buyers are buying, okay. So buyers are buying. Let me show you. So whenever the RBL is greater than level 50, means positive sentiment. So whenever you see the price is above here, buyers are buying. For example, I want to show you here. So the green line, you can see it's above level 50. So what do you see? That the market was buying. So in here, what do you see? Whenever the green line is less than whenever it's below, I mean whenever it's less than level 50, the buyers, the market is selling. That means there is a negative sentiment and sellers are selling. I think you have understood. So whenever, so there is another condition. So one condition was whenever the green line, which is the RBL, is greater than level 50, means that is positive sentiment and the market buyers are buying. Whenever you see that the green line is below level 50, it means that the market is in negative sentiment and sellers are selling. That is the first condition, which I have explained in the opposite, when there is a negative or a positive sentiment. Let us now talk about the conditions of overbought and oversold also. So whenever the RBL, the RSI price line, the green line, is over level 68, whenever it's greater than 68, means there is a buying momentum, which will show that the buyers will slow. So means that the buyers will have a slow. So I would like to explain each and everywhere by explaining and showing you. So there you can see that the green line. So there you can see, whenever you see that the green line is greater than level 50, means the price is in positive sentiment. We say positive sentiment, and means buyers are buying. I think you have understood this thing. Exactly, you have understood, because the RBL, because I want to show you. So RBL is greater than 50, and that is why the market is buying. Okay, the RBL is greater than that level, and you can see that the market is buying. So the RBL is exactly below or less than. Let me also explain this one. So RSI price line is less than level 50. So this means is negative. This means negative, okay, sentiment. So sellers are selling, and you can see in here that this market, you can see that the RSI is below the level of a 50. There you can see that exactly the RSI, or the green price line, is below that level. Exactly, that is one thing that you have understood. So the other thing, which is exactly a very important, is let us know the momentum when we always expecting reversals, because this is exactly a helpful also. So right now we know in the condition of level 50, and whenever the green RSI is above or below on level 50, and what the condition of the market will be. So whenever you see that the RSI price line is greater than level 50, this means positive sentiment and buyers are buying. Whenever the RBL is less than level 50, so it means the price is less than or it's below, means the negative sentiment. Right now, what shall we do then? We shall do whenever the price is above. Okay, the RBL, you see that the green RBL is above level 68. What will happen? So that is what we wanted to know as a structure of the TDI. So whenever you see that, buying momentum will slow, because whenever the price reaches above that level, buying momentum will slow. Okay, whenever RBL is greater than 68, means buying momentum will slow, and what we are expecting is reverse. So we are expecting reverse, so the market will make reverse. So we are expecting reverse. Okay, so you see that the price is greater than that level, and for sure the market reverses to the downside. As you can see, the market is greater than level, and this is the level which I'm explaining. You can see that the price is exactly reversed at this zone, and then you see that it's continued down. Okay, so there is where you see the RBL, the green line. There is exactly where you see that the market is reversing to the downside. So whenever the RBL, the green line, which is the RSI price line, is greater than level 868, so we are expecting buying momentum will slow, so there is no buying, and you can see that the market were buying so strong and aggressive buying, and then exactly become a 2 week, and then what you see that the market reverses. So whenever you see the RBL, and this is the condition which is exactly called the momentum slow, which will make a reversal of buying opportunities. So buying will be slow. So exactly the next one is when the RBL, the green line, the RSI price line is less than 32. Okay, what happens? So exactly, I would like to explain this one here. I would like to explain this here. You can see whenever you see whenever, because here and here the condition is the same, but you can see that I cannot type anything here because I have a space to type here. So the condition is the same, no problem. So whenever the RBL is less than 32, this means selling. This means, okay, selling momentum will slow and reverse. So that is the opposite of 68. What happens on level 68? That is what happens on level 68 exactly. So it's very very simple to understand how the TDI is used. So I am exactly happy to give you how these things work, guys. If you have the TDI, I'm sure you will understand as a price action indicator, and shows you more and more things that I cannot explain it right now. But you have exactly a concept right now. Let me continue. Okay, if the green line, the RSI price line, is exactly rising less than level 50, sellers are covering and buyers are beginning to buy. This is what I'm explaining. And if the green line is falling and also less than level 50 or below level 50, buyers are exiting and sellers are beginning to sell. That is exactly what I have explained already. So now I would like you to know how to exit exactly some things we need to understand when we are exiting our trade is considering a long entry or maybe a short entry trades. So I would like to explain that in the next couple of minutes, guys. Let us know explain one thing that I would like to explain because I have explained it I have explained the levels. I have explained also the green line. Okay, what I want to explain is the yellow line right now. The yellow line is the MBL, the market baseline. So the market baseline represents the overall market trend, because whenever we wanted to identify the trend or the direction of the market, we will always look the yellow line in the TDI. When the MBL is rising, the larger trend of the market is trending up. If the MBL is receding, the larger trend of the market is trending down. The primary base of the MBL is the level 50, because we have to keep eyes on the level 50 when we wanted to understand which direction the market is pointing, because you can see right now that the market is exactly pointing on level 50, but we cannot consider as it is a downtrend, as I have sold this market, but you can see that it still is backing. One thing that this sell is totally wrong or risk entry is that we have to wait this move this yellow line to break below level 50. That is exactly the nice selling, or wait to have a momentum buying. It will come to slow and reverse at the level of RSI, or at the level of 68. So this is a risk entry, as you can see that the price is also below on level 50, but exactly this can also be a risky trade, as the trend is still can make reverse above level 50, because as I've told you a couple of minutes ago, the primary baseline of a trend is level 50 when using the TDI. So this is a risky entry, and you can see that we are now near the SL. That is exactly what you have to understand. Wait the baseline. This if this guy is not below here, you cannot totally have a really on. You cannot really on this market to sell, because the momentum or the trend of the market is still in uptrend. That is what you can see on the charity when using the TDI. Exactly, that is what you will know. So so if you are not understanding what I mean, I would also like to show you some other important things. Okay, so when green line is greater than the yellow, and the yellow is flat of the trend up, consider that trend as a long. What do I mean? Maybe there are other conditions. For example, in here you can see that this market, the yellow line is greater than the green line. You can see that the green line is exactly coming on this way, and the green line is coming on the yellow one on here as M formation or double top formation. You can see it's still the green line is above the yellow line. You have to understand what I'm saying. The yellow line is below, the green line is above. So the yellow line is floating. You can see that it's floating up. So it's floating up. So you have to consider this as a trending up, not trending down, because this market is also floating right now. And you can see that the green line is now crossing above level 50. So we are expecting the trade selling line to come above this line also on level 50. So still we have a potential buying. So you can see that the market was buying still, as you can see right here. That is what happening. So guys, whenever the market baseline is forecasting as a potential market reversals, we need to know the larger number time frames we can use. So use 4 hour, use 1 hour, but remember, whenever the yellow line is above level 68, you have exactly an opportunity for reversing, and momentum of buying will slow, and exactly there is where you are expecting a strong selling. And whenever the yellow line or the MBL is below level 32, you are expecting a momentum slow when sellers will fail and buyers will start to lead the market and reverse the market there for getting a nice opportunity for buy. So whenever you see whenever it's near or below that levels, you have a potential selling or buying opportunities. So exactly, I have explained it. The green, I have green line, the levels. I have also explained the yellow. Let us now explain the blue lines, which are the volatility band levels, which are the upper and also the lower volatility bands, which we need also to understand as a structure of the TDI. So let us call them the phi B because we are calling them volatility bands, phi B lines, which are upper and also lower. The, the blue lines, these are the volatility bands, which are the upper and lower bands. So we are giving as a shorter name phi B. So these guys we call, okay, let us call them phi B. Okay, phi B, okay, phi B's, okay, okay. So volatility bands. So the upper phi B or lower phi B. Let us take that short names. So now the volatility band or the phi B when adds another focus of the market sentiment like the strength and weakness. So it's represented by two blue lines as you can see, and that is exactly a typical run outside the RSI price line and also the trade signal line and also the MBL or as you know the market baseline. So these are upper and lower, and all other indicators are between these bands. So it's a self-adjustment band showing strong and weakness in relation to the rate of a changing in a price. As the price is slowly tighten it into a narrow range, the market is slowly down, and the blue lines of the FIBI contract are squeezed together. This is a site of weakness in the market. As prices are rising or maybe descending sharply, the market trends with increasing volatility, and these blue lines widen as a sign of strength. As you can see, this zone, this area, you can see that the green line, which is the RBL, the RB is the price, RSI price line. Whenever it touches or maybe greater than the phoebe, the upper phoebe, so it means that there is where we are getting a strong rejection or strong reversals. We are expecting strong reversals. Oh, as you can see here, you can see here, you can see here, okay, you can see here, you can see here. So every time that the price touches or maybe below or breaks above that bands or the phoebe, we are expecting a sign of a strength. Exactly, you have understood what the phoebes mean to. So right now you know how to use the TDI, and exactly you know the structure of the TDI. Let us now learn this, what is called the Phoebe squeeze. The Phoebe squeeze is whenever the price is whenever the bands are above level level 68. When you see that the Phoebes are above 68, so that is the squeeze. So it crosses above that level, and then we are considering there is a week of buyers and sellers will lead the market. So that means that is a strength, sign of strength. So we can call it, that is the TDI hook. So whenever you see that sign, like here you see that the green line is above. Also you can see that the blue phoebe, which is the upper phoebe, is pointing that the green line is crossing below that upper phoebe. So exactly at this time you can see that there is a squeeze, and that squeeze shows that the market exactly having a sign of strength in here. we can see that there is a strength condition. Okay, there is a strength condition that the market wants to come at this level, and you can see that the blue fibs is exactly above that level 68, and right there we have a sign of a strength, and it's exactly a reversal. There's additional things that you will know when squeeze happen or occur. So trade breakout happens exactly when a VB squeeze occurs. So you should trade a long VB squeeze near level 32, and also trade short if VB squeeze in a near level 68. So exactly, you need a more and more information to get learn how these things work, and exactly you may learn more and more of how to use the TDI. This is me, Abdul Husni FX. I would like you to make research to get more information about how to use the TDI, and exactly more and more things about the TDI. Thank you, and sharp sharp.